Shares of Tesla are down 13% this morning after Tesla's second quarter loss was bigger than expected. Their revenue was also a little bit light. This has long been one of those businesses that you sort of feel like, well, if the revenue number was higher, then maybe the stock isn't dropping the way it is. But there just seemed like a lot of challenges on a lot of fronts. And as has been the case for a couple of years now with Tesla, the clock is ticking.
Definitely ticking. And okay, I'm going to say up front, I'm actually short Tesla, the company, via options. And I'm not short because I hate Tesla or I hate Musk and I want them to fail and I'm cheering all their troubles. No, I think the company is fundamentally in trouble. And for example, they were ballyhooing the $614 million of free cash flow they'd generated this quarter. But where did that free cash flow come from? Well, they spent CapEx, capital expenditures, investments in equipment and such, less than half of what they depreciated. They're not even spending enough to maintain what they have. And they drew down inventory by some $450 million. That is also not sustainable. And it's not what a growing company needs to do. They need to invest not only to maintain the equipment, but to buy more equipment to keep on growing. And if you're not doing that, you're not going to be a growing company. And then in addition, they have lowered the price of their Model 3s, which is supposed to be the car that is going to drive them forward. Pun intended. But the question is, have they lowered it too much? Have they lowered the cost of making those things at the same rate percentage-wise as they've lowered the selling price? And probably not, because the margin's gone down. And so once you lower the price, it's really hard to raise it back up. And so how are you selling cars for less than they cost to make? And if you are, that's totally not sustainable.
Thank you for sort of going into that level of depth, because I think it's important. Like, look, name me a CEO out there who's more of a sort of hot button leader than Elon Musk. I don't really think there's anyone else out there who people have strong opinions about. And so when you essentially back Musk out of the equation, and we'll get back to him in a second, but when you back him out of the equation and you just look at where is the money going with this business, just put aside whatever you think about Elon Musk and look at what are they doing in terms of spending money? What direction are their margins are going in? All that sort of thing. And you pull back from that and you just see a lot of things that you don't want to see. And I forget which analyst said it this morning. There were a bunch of analyst notes that came out this morning, and I'm paraphrasing here. I think it might have been Morgan Stanley, but it was essentially there's just not a lot to like in this quarter, and
right.
Referring to a lot of the things that you just referred to.
Right. So they want to launch the Model Y, right, which is the next generation of their car. But that requires production spending ahead of the actual building of the cars, because they have to get the plant to build the Y. And if the Model 3 is using up all their capacity already, and it is, then where are they going to build the Y? And if you lower your free cash flow, if you lower your capital expenditure spending, you're not building plant to build this new Y. And then how can you rely upon the Y coming in and helping the company grow further? So, yeah, there's a lot of questions aside from management and aside from electric cars saving the world and everything else. I mean, aside from all that emotional stuff, just looking at the numbers raises a lot of questions.
And yet, and we'll just wrap up with this, because it's Elon Musk leading the company and his ability in the past to raise money, to pull a rabbit out of the hat, that sort of thing. It's like this is why I wouldn't short the stock. That's just me. You're a more experienced investor than I am. You're a better investor.
Maybe I'm a stupider investor than you.
You're a better investor than I am, and you're certainly more experienced with options. But it is going to be interesting to see. As I said, the clock is ticking, and I think in the next 3 months, one thing to watch is what conversation is there, if any, about raising money? Whether it's another round.
They did say they felt they were self-sustaining now without having to raise money. But they've said that before too. And one last point I'd like to raise is Elon Musk has lost another one of his long-term lieutenants. Chief Technology Officer J.P. Straubel was announced that he was leaving the company to become an advisor, but that's whatever that means. But he's been there since 2003, and he's one of the longest-term chief-level, C-level officers to leave, and that can't help Musk.
Yeah, that's another narrative working against this business.